So hello students, in this video we are going to discuss about CA Inter Audit MTP Series 1 for Jan 2025 attempt. So without delay, let's get into the MTP. We'll begin with part 1, case scenario based MCQs. So case scenario 1. While auditing A&J Industries Private Limited, CAJ has decided that it would be appropriate to examine 100% of the items comprising turnover of 30 crores as reflected in its financial statements. In this regard, he has designed test of details for transactions forming part of company's turnover. The sales function is automated in the company's information system involving repetitive nature of calculations. Further, in respect of designing test of controls pertaining to turnover, he is in a fix. Nothing but he is in a dilemma. While verifying turnover of the company, CAJ ensures that all the sales are correctly recorded in the books of accounts based on the invoices and discounts have been properly adjusted. Similarly, in respect of verification of employee benefit expenses reflected in the financial statements, he ensures that TDS related adjustments are correctly reconciled and accounted for. Next, Ankush is an article assistant who has recently joined CAJ for practical training. He is also part of the team assisting seniors. Although he has read about assertions, there remain several doubts about the assertions in his mind. He noted down the following points about the assertions as per his understanding. 1. Assertions are the representations made by the auditors. Assertions are generally explicit and not implied. Verification of the assertions helps the auditors in finding out whether the financial statements are in accordance with applicable financial reporting framework or not. And the last point, in the normal course of business, the company also holds a part of the goods as consignee. While verifying assertions relating to inventories, he ensures that inventory held by the company as consignee of the goods on behalf of third parties is excluded from the inventories. Okay, so this is your case scenario 1. So what I did is I've written the case study, all the case studies in a summarized way. Let's answer each and every MCQ with this. Okay, so once again, recall in the case scenario, first of all, client A&J Industries Private Limited and the auditor is CAJ. What happened in the first para? CAJ decided to examine 100% of the items relating to turnover. He has designed test of details for that, and in respect of test of controls pertaining to turnover, he is in a fix, nothing but he is in a dilemma. And in the given case study, it has mentioned about there has been a mentioning about the internal control relating to sales, which is the sales function is automated in the software, nothing but process related to sales like applying discounts, calculating totals, generating invoices, recording sales completely will be handled by the computerized system itself without a manual intervention. And the sales function is repetitive nature of calculation, nothing but similar types of calculations will be performed repeatedly. I'll give a best example for this. Assume one day you went to a DMart, you have selected the products you have want and you reach to a cashier. Now what cashier does, he listed all the products of you in a software. Now what that software does, it will calculate the totals, it will apply the discounts itself, and it will generate the invoice also. Nothing but the sales function is completely automated by the software itself, and this type of calculations will be performed by that software repeatedly. Nothing but same, just like in DMart, in the client also the sales function is automated in the software and it has a repetitive nature of calculations. Now the point here is CAJ decided to test 100% of the items relating to turnover. So the point is 100% testing is proper for test of details, but 100% testing is not proper for test of controls because it is unnecessary or waste of time. Suppose assume there are 100 invoices and you have selected 20 invoices for testing the operating effectiveness of internal control. If for that 20 invoices the internal controls are operating effectively, then generally for the remaining invoices also internal controls will operate effectively. So it is unnecessary or waste of time to test each and every invoice for the operating effectiveness of internal control. This concept you find in SA 500, selecting all items. So with this, we'll answer the first case study MCQ. Considering approach of CAJ in respect of test of details and test of controls pertaining to sales, which of the following statement is most appropriate? A. The approach for both designing test of details and test of controls is proper. No. The approach for designing test of details is proper. Yes. However, it is an unlikely approach for test of controls. Yes. So this is the right option. So we'll see the remaining options also. The approach for designing test of controls is proper. However, it is an unlikely approach for test of details. No. The approach for designing test of details as well as test of controls is not proper. This is also not the right option. So the right option is option B. Next. Second para. CAJ ensures that the recorded sales are based on the invoices and the discounts have been properly adjusted. Next, with respect to employee benefit expense, he ensures that the TDS related adjustments are correctly accounted. Now the second question is, which assertions are being verified by CAJ for correctness of recording of sales on the basis of invoices, including adjustments of discounts and TDS adjustments for employee benefit expense respectively? See, first of all, both these are transaction items. Yes or no? Now, what are the assertions relating to transaction items? 1. Occurrence. 2. Completeness. 3. Accuracy. You can also call it as measurement. 4. Cutoff. And 5. Presentation disclosure. See, here CAJ ensures that the recorded sales are based on invoices and the discounts have been properly adjusted. Nothing but which assertion? Measurement assertion. And with respect to employee benefit expense, TDS related adjustments are correctly accounted. Nothing but also measurement assertion. So here the right option is option A, measurement and measurement. Okay, na? Next. Ankush is an article assistant. As per his understanding, assertions are representations made by auditors. No, assertions are the representations made by the management. Second point, assertions are generally explicit and not implied. No, assertions will be explicit at the same time implied also. And mostly assertions will be implied assertions and there will be explicit assertions also. So this point is also wrong. Next, verification of assertion helps the auditors in finding out whether financial statements are as per the AFRF or not. This is right. See, first of all, assertions are the claims or representations made by the management on which auditor applies audit procedures to test whether the financial statements are as per AFRF or not. So verification of assertion helps auditors in finding out whether financial statements are as per AFRF or not. So the third point is right, but the first and second point are wrong. So what is your third question? Considering the view of Ankush, which of the following is or are false? So option 1 and 2 are false, yes or no? So the right option is A, 1 and 2. Next. Last point. Company holds part of the goods as consignee. CAJ ensures that the inventory held by the company as consignee on behalf of third party is excluded from the inventory. Here the question is, as regards the matters of holding certain inventories as consignee of goods, which type of assertion is or are being verified by the auditor? See, first of all, what are the assertions relating to account balances? 1. Existence. 2. Rights and obligations. 3. Valuation. 4. Completeness. And 5. Presentation and disclosure. See here, CAJ is ensuring that the inventory held by the company as consignee on behalf of third party is excluded from the inventory. Nothing but which assertion CAJ is testing? Rights and obligations. Nothing but whether entity is having a ownership over the inventory of which it has shown in the balance sheet. Whatever the inventory entity has shown in the balance sheet, whether entity is having the right over it or not. Nothing but for the inventory which the entity is holding as a consignee should have been excluded from the inventories, yes or no? So here CAJ ensuring that the inventory held by the company as a consignee on behalf of third parties has been excluded from the inventory. Nothing but which assertion? Rights and obligations. So here the right option is D, rights and obligations. But if you check the ICA suggested answer, the answer will be B, which is completeness and rights and obligations. But in my point of view, the answer should be D, rights and obligations only. This is subject to correction. Okay. So this is your case scenario 1. So next, case scenario 2. Revant, Manohar and Piyush are planning to set up a new business for trading of electronic goods. they have heard in business circles that many entrepreneurs are setting up their organizations as limited liability partnerships. However, they lack knowledge about such legal structures, so they decided to approach CAS for understanding the difference between a partnership firm, an LLP, and a private company. Next, they also want to gain the knowledge of the legal provisions regarding the number of partners and the paperwork involved in forming an LLP. Further, they also have doubts regarding maintenance of books of accounts and the audit requirement for such organizations. Revant, being cost conscious, specifically asks CAS regarding requirement of audit of LLPs. During the discussion, he shares that they are expecting a turnover of 5 crores in the first year of their business, and funds amounting to 50 lakh would be brought by the partners as their contribution. Okay. Next, Manohar is concerned about the rules regarding the maintenance of accounts in software with an audit trail feature. He has vague understanding gained through social media that such rules have been recently come into effect. Moreover, he believes that these features are useful only for auditors. To address his concerns, CAS attempts to explain these matters to him. Next, after resolving their doubts, they decided to constitute an LLP named Blitz Products LLP with the professional assistance of CAS, who helped them in completing the necessary paper formalities. After constituting an LLP, they acquired dealerships of few reputed companies and received a good response from market due to prominent location of their showroom, and are confident of achieving their turnover expectation within the first year of business. They plan to get their accounts audited after closure of the financial year 23-24 from CAS. The finance and accounts function of the business is being headed by the Piyush, and he plans to contact him somewhere around August 2024 for getting audit of financial statements conducted, filing income tax return, and making necessary regulatory compliances on behalf of LLP. Now, so the key points are, there are 3 persons: Revant, Manohar, and Piyush. They are planning to set up a new business. However, they lack knowledge about the legal structure. So they approach CAS. They want to gain knowledge of the legal provisions of LLP. So your first question is, which of the following is correct regarding the difference in types of organizational structures and connected matters? Option A, LLP gives the benefit of flexibility of limited liability of a partnership. See, LLP, it is a limited liability partnership. It gives the benefit of flexibility of limited liability of a partnership. No. Next, LLP gives the benefit of limited liability of a company. Yes. And a flexibility of partnership. Yes. A minimum of 2 individuals are required to form an LLP. Yes. And at least 2 partners are required to take DPIN, nothing but designated partner identification number. Yes. The regulatory authority in the case of LLP is Registrar of Companies. This is also right, because ROC, Register of Companies, is responsible for the administration of both companies as well as LLP. So this option is right actually. Next, LLP gives the benefit of limited liability of a company and the flexibility of partnership, right? A minimum 2 individuals are required to form an LLP, and at least 2 partners are required to take DIN. No, DPIN. So wrong. Next, LLP gives the benefit of limited liability of a company and the flexibility of partnership. A minimum 3 individuals required. No, minimum 2 individuals are required. So this is also wrong option. So the right option is option B. Next, Revant is having a doubt regarding the requirement of audit of LLP. That's why he has approached CAS. The expected turnover in the first year is 5 crores and the contribution is 50 lakh. Now the question here is, which advice would have been provided by CAS to Revant regarding audit of financial statements of LLP, considering the description provided in the case scenario? See, every LLP is not required to get its accounts audited if its turnover is less than or equals to 40 lakh and its contribution is less than or equals to 25 lakh, as you already know, right? Now here in the given case study, the expected turnover in the first year is 5 crores and the contribution is 50 lakh. Nothing but for this LLP, there is a requirement to get its accounts audited. Now the options. There is no provision for compulsory audit of LLPs under the LLP Act. No. There is a provision which is just we have discussed. Yes or no? Next. Every LLP is compulsory required to get its accounts audited under the LLP Act. No. Only few LLPs which has crossed this threshold limit has to get its accounts audited. Next, there exist provisions under the LLP Act and the relevant rules for audit of LLP. Yes. Based upon the twin criteria of turnover and contribution thresholds. Yes. Turnover and contribution thresholds. Turnover and contribution thresholds. However, the proposed business doesn't meet the thresholds and would not require to get its accounts audited. No, the proposed business has crossed the threshold limit. That's why it has to get its accounts audited. So this is also wrong option. Now last one, there exist provisions under the LLP Act 2008 and the relevant rules for audit of LLP based upon the twin criteria of turnover and contribution thresholds. Yes. The proposed business meets thresholds and would be required to get its accounts audited. Yes, this is the right option. Next, Manohar, he is also having a doubt. What is his doubt? Regarding maintenance of accounts in software with audit trail feature. That's why he has approached CAS. Now, as you already know, audit trail, it is a feature in the accounting software which documents flow of transaction, like from a source document to the account entry and ultimately to the financial statement. And this audit trail feature helps entities in their regular operations because it tracks the user's activity, and it also helps auditors for verifying the controls, transactions, etc. Now remember that this feature is not compulsory for LLP. Okay, now the question here is, which of the following statement is correct regarding Manohar's point of view? A. Audit trails are useful only for auditors? No. It is useful for both entities as well as auditors. Audit trails are useful for businesses as well as auditors. Yes. However, maintenance of accounts in software having feature of audit trail is not compulsory for LLP. Yes. This is the right option. Audit trails are useful for businesses as well as auditors. Correct. Maintenance of accounts in a software having feature of audit trail is compulsory for LLP. No, it is not compulsory for LLP. Audit trails are useful for businesses as well as auditors. Yes. Maintenance of accounts in a software having feature of audit trail is compulsory for LLPs having certain turnover thresholds. No, there is no turnover threshold. It is not compulsory for LLP. That's it. So this is also wrong option. So the right option is option B. Okay. Next. Now they decided to constitute an LLP named Blitz Products LLP, and they are confident of achieving their turnover expectation in the first year. What is the turnover expectation? 5 crores. Next, Piyush, one more person, plans to contact CAS at August 2024. Why? For audit of financial statements, for filing IT returns and necessary compliances of LLP. Now the question is, which of the following statement is correct regarding Piyush's plan? A. Auditor is required to be appointed at least 30 days prior to March 2024, March 31st, 2024. See, as per LLP Act, the first auditor of the LLP should be appointed at any time before the end of the first financial year. That is the requirement in LLP Act. So here Piyush is planning to contact CAS for the audit of financial statements when? August 2024. That is wrong, because we have to appoint the auditor for the LLP before the end of the financial year anytime. So here auditor is required to be appointed at least 30 days prior to 31st March 2024. No. Auditor is required to be appointed at least 60 days prior to 31st March 2024. No. Auditor is required to be appointed at any time before 31st March 2024. Yes. Therefore, Piyush's plan to approach CAS is not in accordance with the relevant rules. Right. Last, PU's plan is proper and there are no specific provisions for appointment of auditor of an LLP in accordance with the relevant rules. No, there are specific provisions which says that auditor has to be appointed at any time before the end of the first financial year. Next, last one. Considering PU's plan to contact CAS in August 2024 for making necessary regulatory compliances could lead to default by LLP in filing its annual return, default by LLP in filing its statement of accounts and solvency, default by LLP in filing its annual return as well as statement of accounts and solvency, no default by LLP in making necessary compliances. See, as per the LLP Act, every LLP has to file annual return within 60 days from the end of the financial year. And every LLP has to submit a statement of accounts and solvency within 30 days from the end of 6 months from the financial year end. Nothing but, suppose if financial year ends at 31st March 2024, from here 6 months, nothing but 30th September. From here within 60 days, within 30 days, we need to submit statement of accounts and solvency. So here in our case study, Piyush approached CAS at August 2024. Nothing but there is a problem. There is a problem regarding annual return because we need to submit annual return within 60 days from the end of the financial year, yes or no? But there is no problem regarding accounts and solvency because we're having enough time. So default by LLP in filing its annual return. Yes, there is a default by LLP in filing its annual return. Default by LLP in filing its statement of accounts and solvency. No, we're having enough time still. Default by LLP in filing its annual return as well as statement of accounts and solvency. No, no default. No, there is a default. So the right option is A. So this is your case study 2. Now, case scenario 3. Let's read. Vama and Associates were appointed as auditors for Royal Constructions Limited for the financial year 23-24. Nice. During the audit, the auditors observed a significant amount of work in progress inventory. Okay. Instead of attending the physical inventory count, they relied on alternative procedures. These included reviewing production reports, reconciling them with the recorded inventory levels, and analyzing variance trends to assess the accuracy of the work in progress balance. Okay. The auditor also noticed that the company has obsolete inventory of 1,75,000 which had an estimated realizable value of 50,000. So this is cost. This is NRV. And the company has valued it at cost in its financial statements. During the review of property, plant and equipment, the audit team noted that the company included 1,05,000 for employee benefits related to the acquisition of PPE and 1,25,000 for testing the functionality of the equipment, offset by 35,000 received from the sale of samples produced during testing. Okay. Next, Vama and Associates derive a significant portion of their income from Royal Constructions Limited, okay, amounting to 10 lakh, which represents 65% of their total annual revenue. Despite finding financial discrepancies of 3 lakh in the company's accounts, the partners decided to overlook these issues to maintain their lucrative relationship with the client. Now, the key points are: first of all, our client is Royal Constructions Limited and auditor Vama and Associates. What is point number 1? Auditor notices obsolete inventory. Cost is 1,75,000. Realizable value is 50,000. Note, as per AS2, inventory has to be valued at cost or NRV, whichever is lower. So here the inventory has to be valued at NRV, nothing but 50,000. So Royal Constructions Limited should value the obsolete inventory at 50,000 rupees. Fine. Next, audit team noted cost of PP included. See, the question here is, first of all, what amount should be included in the cost of PPE in the financial statements of Royal Constructions Limited? Now, as per, first of all, as per AS 10, The cost of PPE includes 1. Direct cost incurred in the acquiring the asset. Second, cost necessary to bring the asset to working conditions such as testing cost. And lastly, you have to deduct any income earned. So based on this, first of all, cost of PPE, employee benefits related to the acquisition of PPE, which is a directly attributable cost, which we have to include in the cost of PPE. Testing the equipment, which is also directly attributable cost, we have to include this also. And proceeds from sale of samples produced during testing, this is an income earned, so we have to deduct this. So the cost of PPE is 1,05,000 plus 1,25,000 minus 35,000. So 1,95,000 is the cost of PPE. So the right option is A, 1,95,000. Next, Royal Constructions Limited is giving a fee of 10 lakh to auditor Varma and Associates, which is a 65% of their total annual revenue. Partners of Varma and Associates overlooked 3 lakh financial discrepancies in accounts to maintain their relationship with client. Nothing but they're having an insecurity of losing a client, which is a self-interest threat. So, what potential threat to the independence of Varma and Associates arises from receiving fees of 10 lakh from Royal Constructions Limited? Self-interest threat. Okay, na? So this is your case scenario 3. Now, general MCQs. First one. Messrs. RJ and Associates Chartered Accountants has been auditing the books of GP Resorts Private Limited for the past 2 years. GP Resorts Private Limited has experienced a significant increase in visitors due to a successful marketing campaign. This increase in number of visitors has prompted the resort to introduce new services such as event hosting, which contribute higher revenue. Whether Messrs. RJ and Associates should issue a revised audit engagement letter to the GP Resorts Private Limited. Now, first of all, the concept is no need to issue audit engagement letter for each period, yes or no? But there are few circumstances, like if there is a significant change in the nature or size of entity's business, we have to issue a new engagement letter. So here in the case study, there has been an introduction of new services, so there is a requirement to issue a new engagement letter, right? Now, the first option, no. Since Messrs. RJ and Associates has been auditing the GP Resorts Private Limited for the past 2 years, new audit engagement letter is not required. No, this is not the right option, because we have to issue new audit engagement letter because there is a change, significant change in the nature of business. Next, yes, the auditor is required to issue a new audit engagement letter for each period. No, there is no requirement to issue audit engagement letter for each period. There is a requirement to issue audit engagement letter for the upcoming years only if certain situations have been happened. C, yes, a new engagement letter is required due to significant changes in the nature and size in the business of GP Resorts Private Limited. Yes, this is the right option. No, so obviously this is not the right option. Next, 14 general MCQ. Tad and Associates, a sole proprietary firm of Agamya, is offered appointment as auditor of a company engaged in manufacturing of automobile components for the first time. So she is checking the facts about the integrity of promoters of the company and key managerial persons. Matters such as the competence of staff to perform the engagement are also considered by her. The appointment is subsequently accepted by her. What is CA Agamya trying to do by checking such facts? See, here the fact checking is a preliminary engagement activity. Totally, we are having 3 preliminary engagement activities. 1, checking about the integrity of promoters, key manager persons, competence of staff, and implications of matter that have been arisen during the previous audit. This is one. And second one, checking the compliance of ethical requirements. And third one, understanding the engagement terms. So here, Agamya, she's trying to fact check the preliminary engagement activity. So option B. Okay. Next, a practicing chartered accountant has been engaged by a company to perform certain procedures relating to its trade payables. Okay. Such agreed upon procedures includes a verification of purchases from related parties, sending confirmation letters, and reporting factual discrepancies to the management of the company. Which of the following statement is correct in this context? See, first of all, engagement and quality control standards are of two: engagement standards and quality control standards. Engagement standards further divided into two: assurance engagement and non-assurance engagement. If we have been engaged to provide assurance to users, we'll call that engagement as assurance engagement. Okay, now in that we are again having two: assurance engagement on historical financial information and on other than historical financial information. If you are providing assurance on the historical financial information by obtaining a high level of assurance, we'll call that engagement as audit. And if we have been engaged to provide assurance, that to a low level of assurance on the historical financial information, we'll call that as review. And if we have been engaged to provide assurance on other than historical financial information, nothing but example prospective financial information, we'll call that as assurance engagement. Now at the last, if we have been engaged not to provide any assurance to users but just performing certain procedures on certain items of financial statements, we'll call that as non-assurance engagement. In our case study, we have been engaged to provide to perform certain procedures relating to trade payables, a certain item of financial statement, where we won't provide any assurance to the users. So this is clearly a non-assurance engagement. Which standards will be applicable here? Standards on related services. And moreover, and lastly, whatever the engagement you do, you need to maintain quality. For that, SQC1 you have to comply. Nothing but you have to comply here standards on related services, at the same time standards on quality control. So here, what is the right option? The practicing chartered accountant shall perform work in accordance with standards on related services, right? And standards on auditing? No. The practicing chartered accountant shall perform work in accordance with the standards on related services. Yes. And SQC1, right? The practicing chartered accountant shall perform work in accordance with standards on auditing only. No. The practicing chartered accountant shall perform work in accordance with standards on assurance engagements and SQC1. No. So this is the right option, option B. So here completes your part 1 case scenario based MCQs. Chalo. Now part 2 descriptive questions. Starting with 1A. During the audit of a company, CA Jack obtained written representations from management regarding all known instances of non-compliance with laws and regulations that should be considered in the preparation of financial statements. Okay. However, during the audit, he observed that the information provided in this regard was incomplete, and the audit evidence indicating such non-compliances contradicted with the written representations, casting doubt on the reliability. How should CA Jack should proceed in this situation? Now, the key points in this question are: 1. CA Jack has obtained written representations from management regarding the non-compliances, and he observed during the audit that the information provided was incomplete and the other audit evidence is not consistent with the written representations. Now the concept here is you're having a doubt, auditor is having a doubt as to the reliability of written representations. So the answer is, if the auditor has concerns about the competence, integrity, ethical values of the management, then the auditor shall determine the effect of that on the reliability of written representations. In the given situation, it is clearly mentioned that other audit evidence is not consistent, nothing but it is inconsistent with the written representations, which clearly state that auditor may have a doubt about the reliability of written representations. Then as per SA 580, what auditor has to do if the written representations are inconsistent with other audit evidences? Point number 1, auditor shall perform additional audit procedures. Point number 2, if the matter is still unresolved, then he has to consider the reassessment of the management's competence, integrity and ethical values. And if the written representations are still considered not reliable, then you have to consider that effect in your audit report, where you may issue a disclaimer of opinion as per SA 705. So this is your answer for 1A. Next, 1B. CA Shubham, the auditor of Sigma Limited, is performing test of controls and test of details using audit sampling. During these procedures, he observed deviations in compliance with management's prescribed procedures for sales transactions of small values of a product at one location during test of controls. Additionally, misstatements were identified in the sample related to these small value sales transactions during test of details. How should he proceed to analyze the nature and cause of the deviations and misstatements observed in the sample results? So the key points are: CA Shubham, while performing test of controls and test of details, he found few deviations or misstatements, where those deviations or misstatements is having a common feature, where those are of small value of transactions, a product line, and at a location. Nothing but all the deviations or misstatements are having a common feature. If auditor found any deviations or misstatements having a common feature, then what auditor has to do? He has to extend the audit procedures to all the items in the population that possess the common feature. Yes or no? So the answer should be as per SA 530, nature and cause of deviations and misstatements. So as per SA 530, while analyzing deviations or misstatements identified, auditor may observe that many may have a common feature, like for example, type of transaction, location, product line, time, etc. Now what auditor has to do? Identify all the items in the population that possess the common feature and extend the audit procedures to those items. Also, the deviations or misstatements may be intentional, which may indicate the possibility of fraud. Now, at the last, in extremely rare circumstances, auditor may found a deviation or misstatement which can be considered as an anomaly. What do you mean by anomaly? A deviation or misstatement which is not a representative of the population. Then what auditor has to do? Then auditor shall obtain sufficient and appropriate audit evidence that such a deviation or misstatements is not a representative of the population by performing additional audit procedure. Nothing but is confirming that the anomaly is an anomaly. Okay. Next, 1C. CA Srishti, while auditing KSM Private Limited for the first time, utilized the software to analyze financial data, comparing amounts recorded in the financial statements for the current audit year with the preceding 2 years. Okay. Her objective was to evaluate the risk of material misstatement. Fine. Identify the type of audit procedure performed by CA Srishti in the given case, discuss its relevance, and explain whether an auditor's opinion can solely rely on such procedures. So the key points are: CA Srishti, while auditing, she utilized the software to analyze the financial data. We're comparing current year data with the preceding 2 year. Nothing but what is the procedure she is applying here? Analytical procedure, comparing the current year data with the preceding 2 years, trend analysis. Okay, now, and the objective of applying this analytical procedure is to evaluate risk of material misstatement. Nothing but the procedure here the Srishti has performed is a risk assessment procedure, right? So the question here is, what is the type of procedure? Analytical procedure as a risk assessment procedure. And whether auditor's opinion can solely rely on such procedures? No, because risk assessment procedure, by simply performing risk assessment procedure, auditor may not obtain a sufficient and appropriate audit evidence to express his opinion. Then what he has to do? Along with risk assessment procedure, he has to perform further audit procedures also to obtain sufficient and appropriate audit evidence to express his opinion. That's what the answer. So the type of procedure here is analytical procedure as a risk assessment procedure, and the analytical procedure identifies unusual transactions or relationships, which helps you in assessing the risk of material misstatement, mostly due to fraud, which provides a basis for designing the responses. Nothing but after applying analytical procedure as a risk assessment procedure, you'll get to know the risk of material misstatement, based on which you design the nature, timing, extent of the further audit procedure, which is what called as auditor's response for such risk. Okay. Next, lastly, risk assessment procedure helps in identifying risk of material misstatement only, and hence risk assessment procedures alone do not provide sufficient and appropriate audit evidence on which to base the audit opinion. So this is your question number 1. Next, question number 2A. Very simple question. CA Paras has accepted audit of financial statements of an entity. According to the standards on auditing, the auditor is required to send an audit engagement letter to the entity. Fine, we know this already. What are the key areas that should be included in the audit engagement letter? Nothing but the contents of the audit engagement letter. As per SA 210, what are the contents of the audit engagement letter? 1. Objectives and scope of audit of financial statements. 2. Responsibilities of auditor. 3. Responsibilities of management. 4. Identification of applicable financial reporting framework. And 5. Reference to the expected form and content of the report, along with a statement that the actual report may differ from the expected form and content. Right? So these are the contents of the audit engagement letter. But in this question, there is one more point. Under what circumstances is the auditor not required to record the terms of the engagement in such a written agreement? I'll explain this. Listen. Assume there is a law. Let's take Cooperative Societies Act. Just example, this is just an example. Assume in the Cooperative Societies Act, it is clearly mentioned about the objectives of audit, scope of audit, responsibilities of management, responsibilities of auditor, etc., etc. Nothing but in the law itself, it is clearly mentioned about the terms of the audit engagement. Let's take an example. Now, if already law has given you the terms of the audit engagement, then no need to record the terms of audit engagement again in a written agreement. So this is an exception. Yes or no? And so if the law has clearly mentioned about the contents of the audit engagement letter, then auditor is not required to send a written agreement to the client once again. Okay, na? Except for the fact that the law applies to our engagement and the management understand its responsibilities. Okay. So if the law or regulation prescribes in sufficient detail about the terms of the audit engagement, the auditor need not record them in written agreement, except for the fact that such law or regulation applies and that management acknowledges and understands its responsibilities. Okay. Next, 2B, a very, very basic question. When the auditor modifies the audit opinion, the auditor shall use the heading qualified opinion, adverse opinion, or disclaimer of opinion as appropriate for the opinion section. Briefly explain when the auditor expresses qualified opinion, adverse opinion, disclaimer of opinion. First of all, when auditor expresses qualified opinion, in two situations. One, if auditor having obtained sufficient and appropriate audit evidence and he concludes that the misstatements are material but not pervasive. That is first situation where he'll issue qualified opinion. And the second situation is auditor is unable to obtain sufficient and appropriate audit evidence, and the possible effect of the undetected misstatements could be material but not pervasive. Then he'll issue a qualified opinion in these two situations. Then when he'll issue adverse opinion, auditor having obtained sufficient and appropriate audit evidence concludes that the misstatements are material and pervasive, then he'll issue adverse opinion. And the last one, when he'll issue disclaimer of opinion, if auditor is unable to obtain sufficient and appropriate audit evidence and he expecting that the possible effects of the misstatements might be material and pervasive, then he'll issue disclaimer of opinion. That's it. Next, 2C. Rajul Limited engaged an external practitioner, CA Rajul, to provide assurance on its prospective financial information for the upcoming year, which includes projection for a new product line. The company projected a 15% increase in revenue, estimating total sales of 75 crores, driven by the expected launch of this new product. Okay. Mention the applicable engagement and quality control standard and the level of assurance that will be provided in the given situation. Very, very simple. See here, Rajul has been engaged to provide assurance on what? Prospective financial information. See, listen here. This is the engagement and quality control standards. In the engagement standards, If you have been engaged to provide assurance to user, that engagement is called as assurance engagement. If you have been engaged not to provide any assurance to user, that engagement is called as non-assurance engagement. In the question, it is clearly mentioned that you have been engaged to provide some assurance, right? So this is clearly an assurance engagement. In that there are two types: assurance engagement on historical financial information and assurance engagement other than historical financial information. In the question, it is clearly mentioned that the assurance will be provided on the prospective financial information, which is not at all a historical financial information. Nothing but here the standards which are applicable are standards on assurance engagement. Okay, na? That is what the question, right? Mention the applicable engagement and quality control standard, which is standards on assurance engagement, and the level of assurance that will be provided in the given situation. See, assume this is the assurance timeline. At the start, we are having 0%, nothing but no assurance. At the end, we are having 100%, which is nothing but absolute assurance. A high level of assurance which we obtain in case of audit, and a low level of assurance we obtain in case of review, and a moderate level of assurance we obtain in case of assurance engagement, where the moderate level of assurance will be higher than low level, lesser than high level. That is what the moderate level of assurance which we have to obtain in case of assurance engagement. And the practitioner in case of assurance engagement, nothing but if you have been engaged to provide assurance on the prospective financial information, then practitioner will obtain sufficient and appropriate evidence to the effect that the management's assumptions on the prospective financial information are not unreasonable. Whenever we have been engaged to provide assurance on prospective financial information, nothing but, see, the prospective financial information is based on the assumptions of management. Completely the financial information is based on the management's assumption. Now, what auditor expresses opinion is the management's assumptions are not unreasonable. Okay, na? And what is the level of assurance he obtained for that? Moderate level of assurance. Clear? There's one more point. Also explain how prospective financial information is different from the historical financial information. Very simple. Historical financial information will includes events or conditions or circumstances occurring in the past periods, whereas prospective financial information will completely based on the assumptions about the occurrence of future events. That is what the difference between historical and prospective financial information. Next, 3A. Mahavir and Associates is appointed as the statutory auditor of KBC Bank for the financial year 23-24. During the audit, Ms. Chandana, an article trainee, noticed that Siddharth Industries had an outstanding loan of 50 lakh as on 31st March 2024. On March 29, 2024, the company made a payment of rupees 10 lakh, reducing the outstanding loan balance to 40 lakh. Okay. However, on April 4, 2024, Siddharth Industries initiated a reversal transaction of 8 lakh, increasing the outstanding loan balance back to 48 lakh. The payment and subsequent reversal occurred within a short period, with the final outstanding balance remaining 48 lakh after the reversal. Now, considering this scenario, what should be the response of Mahavir and Associates to this matter? Nothing but auditor, particularly regarding the classification of the borrower's account and the potential risk of it slipping into the NPA category. Now, the question here is, initially the outstanding loan was 50 lakh. Now, what happened? On 29th March, borrower made a payment of 10 lakh, which reduced the outstanding balance on 31st March 2024 to 40 lakh. And immediately on 4th April 24, there has been a reversal of 8 lakh rupee, which made the outstanding balance now to 48 lakh. Nothing but this is an account which got regularized near the balance sheet date. Yes or no? So, if any asset which has few credits exactly before the balance sheet date, auditor has to handle with care, and auditor has to check a sample of transactions exactly before the end of the financial year and after the end of the financial year, because they may have some relation to each other, where after checking those transactions you get to know the exact objective behind those transactions, because sometimes the bank may make an arrangement with the borrower to prevent the borrower account from slipping it into the NPA category. That's why you have to handle that with care. Now in the given case, Siddharth Industries, a payment of 10 lakh was made on March 29, 24, reducing the outstanding balance to 40 lakh and subsequently reversed by 8 lakh on 4th April 24. Thus, Mahavir and Associates should carefully assess the classification of Siddharth Industries account and determine if the payment and reversal transactions indicate an attempt to prevent the account from slipping into the NPA category. If yes, the account should be classified as an NPA in compliance with the regulatory guidelines. Done. Next, 3B. You are appointed as an auditor of the prestigious Township Club. As the auditor of the prestigious Township Club for the financial year 23-24, what are the key points you would consider while auditing the income and expenditure items of the club? Nothing but you have to write few vouching points relating to incomes and expenditures of the club. Generally, generally, what are the incomes for the club? It may be entrance fee, it may be from the subscriptions, it may be from the services provided to members like foodstuffs, drinks, etc. And what may be the expenditure, like purchase of sports items, furniture, purchase of foodstuffs, etc. So you need to write few vouching points right into the incomes and expenditures of the club. Like the points may be like from entrance fee, vouch entrance fee received from the members application and the counterfoils, and vouch subscriptions with the counterfoils, and trace the receipts of subscriptions for a selected period with the register of members, and also reconcile the total subscription due, like amount which has to be collected and the amount which has already been collected, which gives your outstanding total subscription due. Yes or no? So like this, we need to write few income points and expenditure points. See, this is actually my class notes, so the writing may not be that much understandable. Let's ignore that part, okay? So we need to write certain income points and expenditure points regarding to club. Next, 3C. During the audit of a limited company, as a statutory auditor, you discovered that a fraud amounting to 5 lakh has been committed by the company. What are the reporting requirements regarding fraud under the company's auditor report order 2020? So here, what is the clause applicable for fraud in Caro? What is the clause number? Clause 11, right? So clause 11 relating to fraud. Now, what are the reporting requirements here? Point A, whether fraud by or on the company noticed or reported during the year. If yes, you have to report the nature of the fraud and the amount of the fraud, right? This is the first reporting requirement. Next, point B, any reporting under section 143(12) of the Companies Act in form ADT 4 has been filed by the auditor to the central government, then if yes, you have to report. Next, point C, if company received any whistleblower complaints during the year, and whether auditor has considered it or not, he has to report, right? So these are the 3 reporting requirements with respect to fraud. Done. This is 3C. Chalo. Our next question, 4A. CA Karan wants to test the completeness assertion relating to the intangible assets reflected in the financial statements of Data Solutions Private Limited. State audit procedures to be performed by CA Karan in this regard. See, here we are going to test the completeness assertion of intangible asset. Nothing but whether all the intangible assets have been included or not. For this, what are the audit procedures we have to perform? First of all, verify the movements in the intangible asset schedule. That is opening balance, additions, deletions, and closing balance. And make sure that the closing balance tallies with the entity's books of accounts. And also, you need to check the arithmetical accuracy of it. Further, with respect to addition specifically, you need to check the whether expenditure is as per the AS 26 or not with respect to additions, and no intangible asset arising from the research was recognized or not, and thereafter whether all the additions have been approved by the authorized entity's personnel or not, and lastly whether proper internal procedures were followed or not, like quotations, tenders with respect to additions, right? Next, with respect to deletion specifically, first of all, understand the management's reason for that deletion, and thereafter verify the process followed with respect to deletion, like again same quotations, tenders, etc. And lastly, whether deletion accurately recorded in the books of accounts or not, including gain or loss, right? So this is for A, simple. Next, for B, SA 330 states that auditor shall design and perform test of controls to obtain sufficient and appropriate audit evidence as to the operating effectiveness of relevant controls. Briefly discuss when such tests are to be designed and performed in accordance with SA 330. When will design and perform the test of controls as per SA 330? Means there are two situations. First one, if auditor is expecting that the internal controls of the entity are strong at the time of assessing risk of material misstatement. Nothing but while performing risk assessment procedures, he is at the view that the internal controls are very strong and he wants to rely on the internal controls by reducing the substantive test. Then obviously he has to test the internal controls. That is first situation. And the second situation, if the substantive procedures cannot alone provide you the sufficient and appropriate audit evidence, you need to obviously test the internal controls. Yes or no? So these are the two situations where you have to design and perform the test of controls as per SA 330. And one more part in the same question. If an auditor intends to place greater reliance on the effectiveness of a control, state its likely effect on the audit evidence to be obtained as a result of such test of control. He'll obtain more persuasive audit evidence. Next one. Why a higher level of assurance may be sought by an auditor about the operating effectiveness of internal control. A higher level of assurance may be sought about the operating effectiveness of internal control when it is not possible or practicable to obtain sufficient and appropriate audit evidence only from the substantive audit procedure. In that situation, obviously he wants to obtain high level of assurance. That's it. Next, 4C. Lotus Limited, a rapidly growing manufacturing company, appointed Riddhi and Company as statutory auditor. The engagement team of Riddhi and Company identified key areas requiring scrutiny, such as revenue recognition, inventory valuation, and related party transactions. Based on his professional judgment, CA Ravi, the engagement partner, directed the engagement team to focus on these critical areas, emphasizing the need for detailed testing to ensure accuracy and compliance. Now, the actual question here is, give some examples of the factors need to be considered by CA Ravi for establishing the audit strategy. So here the point to be considered for establishing the overall audit strategy is considering the factors based on the auditor's professional judgment are significant in directing the engagement team efforts, which is your third point in the factors which you have to consider while establishing overall audit strategy. So you have to consider the factors that in the auditor's professional judgment are significant in directing the engagement team efforts. And what are the examples for that? One, volume of transactions, which may determine whether it is more efficient for the auditor to rely on the internal control or not. Nothing but if the volume of transactions are huge, then obviously you want to rely on the internal control. And if the volume of transactions is less, then instead of relying on internal control, you want to test the transactions itself. Next, significant industry developments such as changes in the industry regulations and new reporting requirements. Example, suppose if your bank repo rates have been changed. Suppose you are auditing a banking company and the bank's repo rates have been changed. Then that may be your significant matter to focus on more, right? Because there is a significant change in the industry. Next one, significant changes in the financial reporting framework, such as changes in the accounting standards. Suppose, what if there is a significant change in the AS 9? So with respect to a client, while you are auditing, revenue recognition becomes your significant matter. Yes or no? Why? Because there is a significant change in the financial reporting framework. And lastly, other significant relevant developments such as changes in the legal environment affecting the entity. What if there is a change, there's a significant change in the Companies Act 2013, then that becomes your significant matter where you have to devote more attention, right? Next, 5A. Messrs. KS, JS and Associates are the statutory auditors of Moon Limited for the financial year 23-24. During an audit briefing, CA Sanket, the engagement partner, explained that the auditor must assemble the audit documentation in an audit file and complete the administrative process of finalizing the audit file on a timely basis after the date of auditor's report. He also highlighted the requirements of SQC1 regarding the establishment of policies and procedures for the retention of engagement documentation in a firm. Explain the requirements relating to the timely assembly and retention of the audit files in accordance with the relevant engagement and quality control standards. As you already know, as per SQC1, we need to assemble the audit documentation in an audit file within 60 days from the date of auditor's report. That is your first point. And during this assembly, no new audit procedure should be performed except the changes are administrative in nature, like deleting superseded drafts. Nothing but, suppose you're having two documents, this first document and this is the second document. This second document is having the better information than this first document, meaning this first document got superseded by the second document. Then you can delete this first document, yes or no? This is what deleting superseded draft. This, while you're doing assembly, it is not considered as a performance of new audit procedure. This is just considered as an administrative change. This you can do. Like this, sorting and cross-referencing working papers, like you are sorting all the assets records in one folder, all the liabilities records in one folder, etc., which is what sorting. And cross-referencing the working papers, nothing but you may refer a sale transaction with a debtor transaction, a purchase transaction with the creditors transaction, like that. Those are the administrative changes that you can perform. Next one, signing of completion checklist. Documenting audit evidence obtained and discussed with the engagement team members before the date of audit report. Nothing but, I'll give an example. Suppose if while you are conducting audit, you have inquired and it is personal. You have inquired a person, assume a production manager, oral inquiry, and you have obtained response from him. And you have discussed this response with the engagement team members also, but you forgot to document it. Now, while assembly, you got to know that there is an audit evidence obtained and you have also discussed with the engagement team members before the date of audit report. Whether you can document it now while assembly, yes, you can perform, you can document it. This is also considered as an administrative change. And third point, retention period. The audit file has to be retained at least 7 years from the date of auditor's report or the group auditor's report, whichever is later. And the auditor shall not delete the audit documentation before the end of this retention period. Right? Next, 5B. The reliability of audit evidence depends on its source, nature, and the circumstances under which it is obtained. Yes, including the controls over its preparation and maintenance. Although exceptions may exist, few generalizations can be made about the reliability of audit evidence. Considering above, discuss such generalizations that can be made about the reliability of audit evidence. See, as an auditor, for expressing an opinion, you need to obtain sufficient and appropriate audit evidence. When you call that the audit evidence you have obtained is appropriate, when the audit evidence is relevant and the audit evidence you have obtained is reliable. The reliability of audit evidence is based on the nature, source, and circumstances, and along with that, internal controls also. Now, audit evidence which you have obtained from the external source will generally be more reliable, and audit evidence you have obtained from the internal source will generally be less reliable. It may also be reliable if the internal controls of the entity are operating effectively. Next, audit evidence obtained directly by the auditor will generally be more reliable than the audit evidence obtained indirectly by the auditor. Next, audit evidence obtained in the documentary form will generally be more reliable than audit evidence obtained orally. And lastly, audit evidence obtained from the original copies will be more reliable than the audit evidence obtained through photocopies. So this is the reliability of audit evidence which you have to write in this question. Next, Kite Private Limited acquired an immovable property of substantial value during the financial year 23-24, which is recorded in the financial statements as an addition in the schedule of PP. The auditor also observed that this immovable property has been mortgaged to a bank for availing credit facilities. How should the auditor verify the rights and obligations assertion for this property to ensure the entity's legal ownership and identify any charges against it? See, here we are going to test the rights and obligations of the PP. Nothing but whether entity is having right over the PP or not. For that, what you have to do, first of all, you need to verify whether the entity has valid legal ownership. With respect to additions of PP, you need to inspect purchase invoices. And with respect to additions of land and building, you need to inspect sales deed, title deeds, etc. Along with this, you need to also identify any charges against the PP. For that, what audit procedures you have to perform? Obtain confirmation from the lenders that they are holding the title deeds, and also verify the register of charges for identifying the charges against the PP. That's it. Next, 6A. KR and Associates, an auditor of FTP Limited, observed that the company has implemented various internal controls addressing financial reporting, operational efficiency, and compliances during their preliminary evaluation. CA Current suggests that all the controls should be assessed to mitigate the risk of material misstatement in the financial statements. While CA Rajat is of the view that only those controls deemed relevant to the audit should be assessed based on the professional judgment. Comment whether the auditor should assess all the internal controls or limit the assessment to only those considered relevant by the auditor during the audit. Also discuss the factors influencing the auditor's judgment on the relevance of controls. See, first of all, auditor will consider only those controls which are relevant to the audit, and there are few factors influencing whether a control is relevant to audit or not. Like suppose materiality, significance of related risk, size of the entity, nature of the entity's business. Suppose there is an entity which is in retail trading, maybe the cash controls relating to cash transactions relevant for the audit, and one more entity which is in a manufacturing business. The controls relating to production process may be relevant for your for your audit. Thereafter, diversity and complexity of entities operations. Suppose if you take an entity which is a global corporation, a multinational corporation, then the controls relating to foreign exchange transactions may be relevant for your audit, and applicable legal and regulatory requirements. Like suppose if the entity is a banking company, then controls relating to provisioning non-performing assets, anti-money laundering rules may be relevant for your audit. So like that, there are few factors which influences whether a control is relevant for your audit or not. So, based on the factors mentioned above, it can be concluded that the auditors should assess only those controls deemed relevant to mitigate the risk of material misstatement in FTP Limited's financial statements. CA Rajat view is right. Next, 6B. Audit program is a list of examination and verification steps to be applied and set out in such a way that the interrelationship of one step to another is clearly shown and designed, keeping in view the assertions apparent in the statements of account produced for audit or based on appraisal of the accounting records of the client. For example, while auditing a company's inventory, the program may include steps to verify physical stock counts, ownership rights, and valuation. Now, the actual question here is, what are the advantages of audit program? Now, what are the advantages of audit program? Simple, like it will provide you a clear set of instructions. It will give you total outlook for the work to be performed. It makes you easier for selecting assistants based on the capability. And without a written audit program, the danger of ignoring certain records, there will be a danger of ignoring certain records, and by putting a signature, assistants accept the responsibility. Principal can control the progress of the audit. It serves as a guide for succeeding, yes, and it also serves as a evidence if in case a charge of negligence being brought against the auditor in future. So these are the advantages of audit program which we have to write in this question. Next, 6C. As the statutory auditor of Guinea Limited, you need to verify if the company has a valid legal ownership rights over the inventories recorded in the balance sheet as on March 31, 2024. What audit procedure should you perform to verify the company's ownership of the inventories, including items stored at third-party locations? Nothing but here you have to test the rights and obligations over the inventories. So what are the audit procedures you have to perform to verify the legal ownership rights over the inventories? First one, vouch recorded purchases to underlying documentation like purchase request, purchase orders, receiving reports, nothing but goods received note, vendor invoices, payment receipts, etc. Thereafter, evaluate the consigned goods. Consigned goods are the goods owned by the consigner, held by consignee. Now you have to test whether entity is holding any consigned goods, because entity has to exclude that from the inventory now. Next, examine client correspondence, client communication, sales and receivable records, data records, purchase documents, etc. Determine existence of any collateral agreements. Suppose if entity has pledged its goods for securing some loan, for that you need to determine the existence of the collateral agreements. Next, review consignment agreement. Sometimes entity will deliver the goods to someone, to consignee, for sale. For that you need to review the consignment agreements. Thereafter, review material purchase commitment agreements. Sometimes entity will make an agreement with supplier that entity will purchase goods over a certain period, which is what called as material purchase commitment agreements. Now in that agreement, it may have few terms like the ownership of the goods will be passed to the entity upon the shipment. So for testing the ownership, you have to review such material purchase commitment agreements. Next, examine invoices for evidence of ownership. That is, the invoices shall be in the name of the client. And lastly, obtain confirmation for significant items of the inventory. Nothing but, for instance, inventory is held by the third party. Assume inventory held by the warehouseman, I mean in a warehouse, or inventory held by a job worker. The auditor should insist upon obtaining declaration from such third parties on their business letterhead and signed by an authorized personnel of that third party, confirming that the items of the inventory belonging to the entity and are being held by such third party on behalf of and for the benefit of the entity under audit. So these are the various procedures which auditor has to perform to verify if the company is having a valid legal ownership rights over the inventories. Next, last question. During the audit of a company, CA Atul noticed that the company is facing significant skilled labor shortages, resulting in hampering operations of the company. The company's manufacturing is dependent upon skilled labor coming from villages in certain districts of eastern UP. However, due to job opportunities available in near villages now, many are not interested in leaving their native villages. The company failed to keep its commitments due to such situation. Consequently, lost orders and faced a decrease in its revenues. The fixed cost of the company remained at a high level. As a result, the company is facing a liquidity crunch and is not able to pay its creditors on time. This shows that the company's going concern may get affected. The bankers of the company are also not willing to help the company to tide over the liquidity crisis. So the auditor has doubts over the going concern status of the company. How should management of the company try to address auditors' concerns, and what audit procedures may be performed by the auditors in such a situation? So if the auditor is having the doubt over the going concern status of the company, management should make an assessment and management should address auditor's concern by preparing a cash flow forecast. If the management, after assessing going concern on their part, if they're believing that the entity is still going concern, then they have to address auditor's concerns by preparing a cash flow forecast, nothing but inflows and outflows of cash. After that, auditor will perform few audit procedures on that, like evaluating the reliability of data used in the preparation of such cash flow forecast, and whether there is an adequate support for the assumptions, and lastly whether any additional facts available since management made its assessment. So these are the audit procedures which auditor has to perform. So this is your MTP video. I hope this video boosts your preparation. All the best for your exam. Thank you.